All right, good evening. Welcome. My name's Ray, and we've got a couple of things to go over. We've still got the virus going on. We're going to take a look at the month of March, where my current position has ended, and we're going to go over some other market things as well. So, we've got the virus to start off with. At the moment, 860,000 cases. The last time that I posted or reported was over a week ago now, just passing, say, 400. Just passing 400,000, and it's basically doubled since then. Deaths has done the same thing, and it's coming from everywhere. So some interesting things. Um, a couple of countries have surpassed China in the total case count. We have USA leading the way at more than double China at 188. Italy, Spain as well have also surpassed China, and the deaths have also surpassed China as well. There might be some things with China, might have heard things like they're not reporting correctly and things like that. But at the moment, this is the information that we've got so far. So that's what we've got. Um, Europe still seems to be uh, a big hot zone as well. Uh, Many countries in Europe totally surpass US itself, but for a country, US is obviously winning. But for a region, Europe still seems to be in the lead with total case counts and deaths. We've got Australia here, almost $5,000, and not $5,000, 5,000 cases, and we have jumped up to 21 deaths, which for the amount of uh, time that we've had the disease in Australia, uh, since at least the 24th of January, we have not actually seen a significant rate of growth. Um, so if we just jump into Australia itself, we had a period in late March where cases have risen pretty fast, and since March 22nd, we can see the dailies here. March 22nd basically put Australia on full alert, but we have not seen a rise bigger than 22nd since. It's been over a week now, and we're just steadily rising. That's okay, and deaths is starting to rise as well, bulk of them being in the past week. Yeah, past week. Cool. Um, but it does seem that some of the fear has worn off. There is a lot of people just going about their daily business, and like even though social distancing rules and self-isolation are being gradually ramped up, we're seeing a notable leveling off, which is good, but there are still a lot of people out. In certain areas, there is a lot of people going to shopping centers and other places as well, and yeah, it makes it does make sense, but it doesn't make sense at the same time as well. And we can easily go from where we are now back into more exponential curve. But right now we're doing all right. So cool. So the virus is going on. There has been clearly a lot of fallout from this. The government is stepping in to do a handy amount of work um, to stimulate and save people in uh, economic hardship. And one of the things which I would like to list or mention at the moment would be those people have lost their jobs. Last time I mentioned there was a lot of closures going around bars and the like. And it has also affected retail as well, with a lot of other companies voluntarily closing their doors and just to ride this out until a later point. But we've got a news article from SBS News, uh, and the title is Australia's Tenants Who Can't Pay Their Landlords Due to the Virus Are Begging for a Rent Freeze. This headline is basically one of the things that I was actually searching for, where those people laid off and or well laid off or reduced hours have not been able to find steady work or anything like that because everything's shutting down, everything's on a downtrend, and currently they're not able to pay their rent um, consistently. So if we just have a look at some of this news story, we've got landlords and tenants finding some compromises to be able to survive, really. Um, if tenants can't pay their rent, then landlords don't get their pay, and then banks don't get their pay. So there's three different sections here: tenants, landlords, banks. So far, and the idea is, in my opinion, complete opinion, I feel like one of these three will have to break somewhere. Um, I don't feel like there should be, or I don't feel that everyone can be or will be saved from like the current circumstances going on. People lose jobs. People might not be able to find jobs for a while. And with that, there is the landlords as well. Australia has one of the um, highest housing debts, or like debt to income, um, basically leveraging as much as they possibly can. And they rely on their rent or tenants to live. And if that can't happen, then the housing market becomes exposed, which for myself, I am currently a renter. Uh, no excessive, no excessive bills, no excessive loans, and this is basically the opportunity that I've been waiting for a while now. There was a conversation that I had with my brother, uh, like 5 years ago or something like that, when Sydney, New South Wales were booming, and we came to the conclusion that this cannot go on. Something has to break, and while the economy is still churning, that's fine. But for some reason, we believed it was very weak, and mostly due to leveraging and stuff like that. But yeah, there's a problem here with over leveraged landlords, tenants. They rely on their tenants to get rent, but if tenants can't pay their rent, and that is a widespread thing, they might not necessarily be able to get another tenant which can pay, as they can't pay at all. They're most likely homeless or something like that, or moving back with their parents, and then these landlords have empty houses, not generating rent, and then they're exposed. Cool, big problem. But if we have a look, further, there's not much here apart from other people, but there is announced that the PM, Scott Morrison, has a 6 month. It's a moratorium, or basically freeze on evictions, and that does not solve the problem that we're faced here. The tenants have to get the money from somewhere, and this does apply to commercial and residential. So, commercial being the companies which rent places, for example. Let's just say some shoe company, or like some clothing store in a shopping center. So if they shut their doors, how are they supposed to pay rent? And they're not getting any income because they're closed, and that the entire environment is absolutely appalling. But yeah, like with the landlords, they might not necessarily be able to pay their mortgage as well. So they've got to talk to the banks, and the banks are basically trying to put out as much firepower as possible. The RBA is, and the government is also doing that as well. But this 6 month freeze on evictions basically gives us a timeline. We've got 6 months. 6 months to fix the economy. 6 months to get rid of the virus, and that obviously doesn't mean there is it doesn't mean that they can't continue to postpone this further, but they're just postponing the problem. It doesn't fix the problem without either A, solving everyone's problems, or letting an area break. And most likely the government would want to save the tenants more than the landlords. The landlords, they have They've got a mortgage. They've got some capital. They I wouldn't know 100% because I don't have a mortgage, but from all of this financial advice, uh, over leveraging for an investment is a terrible idea. And these are some of the problems that come with property investment. So if you're not if you're not ready to survive these problems, then well, why? Yeah, like why does property get like a lifeline and the share market does not? So some of the questions to ask. But yeah, big problem, and gonna move on to the next area. I have been following on Reddit. This is subreddit OzFinance, pretty common, but it's interesting to see into some of the people in these situations. Tenant claims that his rent will reduce by 30% over the next 6 months. The landlord sort of can or sort of can't, because his rent covers his mortgage and there's risks. So just having a look at some things. Gave my tenant 50% reduction for 3 months. Tenant lost their job. Cool. Well done. Other people not offering anything. Full-time employee unlikely to be affected. But if they reduce their rents, their partner got made redundant. So there's like all of these people being affected. Who do you save? Who do you save? You can't save everyone. Cool. But yeah, leading on to tenants, there is a specific company which I've been watching pretty recently. This is Scentre Group on the Australian Stock Exchange. SCG is the symbol, but this is basically the company which runs or is the real estate investor of Westfield. Westfield shopping centres, Scentre Group owns them and rents out some tendencies to other people. So Scentre Group over the past 6 months has been absolutely hammered, at least a 50% decline. Back in January, trading around about $4, and has had at least 60% drop down into $1.76. And yeah, this company, Westfield, has had a couple of stores just shut. What can Scentre Group do if a company shuts their doors? They can't evict them. They can't evict them now, and if they can't evict them, then what do they do? Scentre Group is basically the landlord in this situation. So Scentre Group most likely would have some loans. They're a real estate investment trust or REIT, and they're property investors. So they're the landlord in the situation, and if they can't get it, then they would risk losing their investments. Like a landlord will lose their house or something like that. So yeah, Scentre Group has been under the pump, and just until recently or today, just double checking some information. But as far as I'm aware, Scentre Group has found some loans, or they have a loan facility. So they've got an extra area to withdraw cash from if they do so, if they need it, which is basically a lifeline. So Scentre Group has been saved, or uh, has a little bit of safety with their investments. They are currently up 12.46% today due to that news, and we'll see how it goes into the future, whether more companies shut their doors, if we see Scentre Group cover or anything of the like. It's just a interesting story about one of the companies here in Australia. Cool. If we have a look at the market as well, the overall market, ASX 200, top 200 companies, we've got a big, giant, wavy wave over the past 5 days at least. Ups and downs, peaking on Tuesday. If we have a look at the past month, we've got a trough down to the 20th and 23rd of March, which is basically when the biggest infection day happened. But we've recovered since then. We've recovered 15.68%, which is very, very interesting. So we've gone up 15.68% in a matter of days, where if I can find it along this line, which we'll say right about here, the entirety of 2019 was about 21%. So we've almost done an entire year's worth of increases after an entire decade, almost, of losses. And the virus is still going, which has a lot of people confused why the market's going up. Frankly, I don't really care if the market goes up or down. It's just your performance in relation to when the market goes up or down. So if everyone's doing badly and you're doing not as bad, cool. The market has to go up one day, otherwise goodbye humanity, which is a post which I saw in one of the Facebook groups, which is hilarious. But yeah, market's going up. A lot of people are buying into what they believe is the bottom or a dip. This might not necessarily be the end, but we've got a recent bottom, which is very interesting at 4,546. And yeah, at the moment, things are going pretty fine. This big, giant, massive drop here. Cool, not a problem. If we go have a look at our personal portfolio or position, I like to interchange between them, but I know it's not 100% correct. But yeah, since the high, down 26.4%. Cool. Yeah, if we have a look at our personal, we've sort of leveled off at 84k at the moment. So this is after today's trading session being Wednesday, the 1st actually. And we've locked in another point on our graph, so we'd be able to see whether we can improve or not improve on our circumstances here. After the market has dropped a significant amount, we might be able to see a rise, but when we might also see a decline as well. If we have a look at our individual accounts or the day by day, we've finished up March with a $11,000 decline after a $4,000 decline in February. So around about $15,000. But we've also had a significant gain over the past 3 months prior to that as well. So we're sitting at 84k in total, which is basically November. November is where we're sitting at. We've lost 1, 2, 3, 4, 5, 6 months, or 5 to 6 months. And yeah, at the moment, riding fine. Credit card debt is running a little bit high, or the debt itself is running a bit high. But also in the meantime, we have been increasing our spaceship account pretty significantly compared to where we started, only doing deposits here and there. Changed it up into in March, going from $25 a week deposits to $50 every day or so, just to capitalize on each rise and loss. That was the idea behind it, instead of lump summing it into a specific day, which might be the peak, as is transfer days. But I also didn't want to throw as much money into it as I possibly can, because we're about that averaging here. Shares has taken a decent hit, but we've managed to recover a little bit. We're sitting at 54, 55k, and if we backtrack, that's basically where we started in May, June last year. But interesting thing, 58k with pretty much maxed out credit card, and that was to leverage myself into this position. Super has increased but decreased from its highs, and we're still pretty significantly down on that front as well, which is fine. And our cash balance is starting to stack up as well, which is going up the same as spaceship as well. So this is fine. This is fine. If we needed some quick and easy cash, we can take out some spaceship, we can take out some cash, as those are pretty not as significant compared to superannuation or shares portfolio. But yeah, as we continue to work and earn some money, we've had a couple of dividends come through, but not too many. Here we have the latest one coming in May 2015, Aventus Group, which is another REIT, which is at the moment partially exposed, but they still decided to pay out a dividend of 1/4 of what they're usually doing. So instead of getting $65, getting $16, which is fine. We'll see how these companies rebound later on in the future. We've also got our first May dividend payout, so we can start comparing months year to year, and basically in May we're trying to beat 402, where last year we had payouts of NRW and Bank of Queensland. So we've already had NRW paid out already. This was paid out in April, but we have yet to have Bank of Queensland pay out so far. There might be other things like DDR, which could pay out or not pay out during these times, but we'll see how things go. Cool. Spaceship graph looks something like this, seeing this gradual rise, a faster rise, and then ramp. If we have a look lastly at super, we've locked in April again, and basically capital stable is currently doing what it's meant to be doing. Overall, super is down 3.2k or 9.16%. But we can see where these losses came from: accelerated growth, and balanced, which is to be expected. And capital stable has brought that back, having a 19% drop in accelerated growth due to it being leveraged or borrowed, versus capital stable, which tends to be more cash or defensive and have some bonds in there as well. It's a little bit of a shame that I moved out of some bonds the literal month before the market downturn, but still having that defensiveness is what I was after, and it's going well. So we'll see how that goes over the next month. And yeah, a lot of interesting things going on, and it's not over. Hopefully, we'll see. We can see what some more companies are doing, how they fare up. We'll see whether the housing market starts to become more exposed. Can we bounce back from our drop from 100k? Can we make it back? And I still want to get out of this credit card debt, but that's fine as well. And I'll probably leave it there. Thanks for tuning in, and I'll see you next week.